Good afternoon, everyone. It's Thursday, the 7th of June, 2012, and this is Brian Shannon from AlphaTrends.net. Let's take a look at this market here. I had provided a midday update and wanted to follow up on that. So the S&P 500 did finish with an 8-penny gain, but as you can see by that red candle, it finished well below where it had opened. Taking a look at the 30-minute time, and actually let's just stay on this time frame because this has been an important level right up here at about 134. We fell short of that today. Obviously, our high was 133.53, and during the midday update, we'll take a look at that 1-minute chart. I was talking about the inverted head and shoulders pattern that was setting up, and it seemed as though if it got back above the 133, that it had the possibility of continuing up maybe towards that 134 level, because at that point we had a flat to advancing volume weighted average price. Well, if you were looking at it on Twitter, I had mentioned that it looked like it was headed that way, and then right here as it broke back down through volume weighted average price, as it looks like no go for today. Basically meaning all bets off. Don't look to bet on that long side because we were back below the average price, and this was looking like a failed little move higher. Well, that failed move led to a fast move lower into the close, and now it looks as though the scenario that I had started to outline might be coming true at the best case scenario. Now, this is the best case bullish scenario that I'm talking about. It's not necessarily bullish. It's a potential setup. That's all it is. It's a something that might possibly happen, and that is that we have our left shoulder over here on the S&P 500. We're looking at a 30-minute time frame over the last month or so. This would be our head, and now we're starting to form our right shoulder in here. So this could be the beginning of maybe a multi-day, 3 to 5 day pullback that hopefully would find some support above this rising 5-day moving average. If it's to do that, then we have the possibility that this market could rebuild some strength and possibly break out past the 134 level. But when we look at the daily time frame, we have to remember we still have a declining 20 and 50-day moving average. This market is officially still in a downtrend. What I should say is we still have a pattern here, and that pattern is lower highs and lower lows. We don't have a higher high here. Now, if we broke to 134.50, I wouldn't want to chase that market though at that point, because we've already, look where we've just come from, 127 up to 134, and that's something I'm going to talk about at Dallas tomorrow, and that will be webcast live at 8 a.m. Central, so that's 9 a.m. Eastern. If there's trades available, I'll take them, but typically at that time I'm pretty slow to take action, so we'll make it as educational as possible, and check back at alphatrends.net later on, because I'll be posting some setups that I want to talk about for tomorrow. Anyways, back to this. We still have a pattern of lower highs and lower lows. Now, if we see a pullback down even towards maybe 131 in the next few sessions, and then it begins to stabilize in here, then we have the possibility of another push higher. But you have to ask yourself, where does it have the potential to go if it's to break beyond that 134 level? Well, we still have the potential for resistance at this prior important level of support and the declining 50-day moving average. So it's certainly not smooth sailing if we get this. I think that you're safe to make better short sales as the market declines, and then look for, will the market hold at this rising 5-day moving average? If it does hold in there, then perhaps we're on with the inverted head and shoulders pattern. No one has a crystal ball. The idea is to frame our analysis and try to figure out the likely scenarios and when to be involved aggressively or sit on the sidelines and cash. And this has been a difficult market for the, since May 1st basically, and it's going to continue to be volatile in here. It looks like the Nasdaq was down 25 cents. It came right up to and slightly through that 63 level we've been talking about, and that's why these levels aren't exact precise numbers. And this is what I was talking about here. This is why we still have these in, is that it's a prior band of support which tends to act as resistance, and we didn't clear back above that 63.40ish. If we were to close above there, that would be a different story. Now in the Nasdaq, it's not a complete it's not a horrible thing what we had on the intraday time frame here. We still have the possibility as well that we could see support at a rising 5-day moving average, and that would be the dominant moving average you want to trade in the direction of on the intermediate term time frame. But then you look to the daily time frame with a declining 50-day moving average, and it's telling us things just aren't clear. We have mixed messages from from different time frames, the best case we could hope for, I think, is an inverted head and shoulders pattern, so a higher low that we pull back and create a higher low over the next few sessions, and then a quick rally up towards this prior important level and the approximate location of that declining 50-day moving average. That's what is a likely potential scenario. You don't trade it just by buying the pullbacks, though, thinking that's going to happen. You want to wait for it to pull back, show some strength, and then look to get involved. So right now it's still very murky. The Russell 2000 kind of talked about the same scenario in here. In this market, obviously, just undo those lines. You can see that this prior important level of support at 78, we fell short of it about a week ago. Today we came to $77.72. And again, where has this market come from in the short term? We've just come from 73 up to approximately 78. So what's that, about 7 or 8%? We've had about a 7 or 8% rally. We had a pattern in here of higher highs and higher lows on the 10-minute time frame. Well, guess what? We had a lower high in the afternoon and then a lower low. And you could say the same for all of these markets, that the S&P 500 had the lower high after having this pattern of higher highs and higher lows for the last few days. So that tells us we're in a transitory mode, whether it's going to be distribution and we fall apart, or if it's just a pullback, nobody knows yet. That's why our analysis has to be continuing to move forward as the market reveals new information to us. We can't predict so much as to anticipate. We want to anticipate all the potential scenarios and then wait for price confirmation before we actually participate. Then we want to manage our risk based on overall conditions for the stock, for the market, for what kind of news environment we're in, and it's just not a simple job. Anyone that tells you otherwise is simply basically a liar. So anyways, the Russell 2000, we've got a pretty strong barrier, it appears, at $78 a share. Best case we can hope for is that we start to accumulate in here, build up some energy for a break past that 78. I wouldn't expect it to happen in the near term, though. That is the next few days. Semiconductors basically came up to the level we were expecting them to find a little bit of resistance, and that's near this 32 level. This market is particularly weak, still below that 200-day moving average as well. You can see that from the October lows to the highs this year, this market actually pulled back 61.8% before bouncing, which is a much stronger pullback than the other markets had experienced. The semiconductors, back to them on a 30-minute time frame, here's our barrier, $32 a share. So even if it gets above 32, what's the next potential area of support? Well, or resistance rather. You have to think that the people who bought in here prior are going to be. How would you feel at any point in the chart if you bought over here just before it broke down and you're still holding? You'd probably be thinking, well, just give me my money back. If I can get break even, then I'll move to the sidelines. And whatever the psychology is that you think in these situations. The semiconductors, they broke a short-term trend line. Nothing to be excited about here. The 65-minute time frame, I think, really shows the trend well, that we have the potential of the inverted head and shoulders pattern. We're just at the beginning of the potential right shoulder. So again, it's nothing to be excited about. Let's see if, in fact, this 5-day moving average does hold its support down near about 30.5. If you take a look at the volume weighted average price, since it gapped lower last week, it's right in that same area as well. And if you take a look at the S&P 500, since this gap lower on June 1st, that's exactly where the 5-day moving average is. So 130 is going to be a very important, continue to be an important level. The financial stocks, they got right up to the top end of their range. 1425 is what we've been talking about. It hit 1424 today. So it came, what happened in here? We had a failed breakdown, and then the market got back up into this prior range that it was in, and immediately went to the top end of the range. So once it gets up to these levels, you want to look at it and say, well, here's a prior level of importance. Now, do you want to be buying up in there, or do you want to be looking to liquidate any longs or tighten your stops? You certainly don't want to be a buyer. Ask yourself again, where has it come from? It's just come from 13.25 up to 14.25. So it basically rallied about 8% over the course of a couple days in a primary downtrend. And the thing thing is, we see a lot of violent rallies in an overall downtrend. We have to be aware that these prior levels, especially after we've expended energy, will tend to act as resistance once again. Now, if the market can pull back and in an orderly way and then find some support and, let's say, stay above 1370, well, then perhaps it has the opportunity to build and build for a breakout. And that's, again, where would it have the potential to go if it broke this level? What other areas are there likely to be sellers looking to get out? These prior support levels will tend to act as resistance. So up at about 1440, and then above that about $14.90. So it's not going to be smooth sailing to the upside. There's nothing to get excited about from these charts. We still have on the daily time frame a declining 50-day moving average. In my mind, that means the dominant trend on the daily time frame is still lower, and rallies should be treated as guilty till proven innocent. That's what I talk about all the time. The stocks that we looked at, Amazon, again, it was too late to buy this thing. That is as of today. We've had this pattern of higher highs and higher lows. We were observing it and correctly pulled back to the rising 5-day moving average, but this day was very choppy over in here. So anyways, I would say wait for Amazon to pull back. Certainly don't purchase it in here. I think seeing it pull back to 215 or so would be very reasonable over the next few sessions. At that point, we're going to see this 10-day moving average kind of maybe sneaking up through that 20-day moving average. And this stock made it up to where it was supposed to find some resistance, this prior support. So, these stocks are actually, in the market overall, is doing a lot of what it should do. We talked about CIGX and that it would have to get back above this $3.92 or so level before purchasing it. We spoke about that midday. Well, had you gotten involved, I don't think there was a reason to, but, back above the highs of the day was the place to get involved. And it still looks like a good setup, but if it's not, so we're still in anticipation mode here, but we want to wait for price confirmation that the buyers do in fact gain control by creating a higher high before we actually participate. Once we're involved and we've stalked the trade, we do get involved, let's say at 13 or 395. Well, then our job is to manage risk. Our first job is the initial protective stop. What's the worst case I'm willing to accept under normal conditions, meaning if the stock doesn't gap lower by 20% the next day? Well, I think that you have to look at, again, the definition of a trend and higher highs and higher lows. So if it fails, if it breaks out to 395 and comes back in below 375, I think you got to be a fool to continue to hold it. You can always get back in, but it would invalidate that definition of trend. MDCO, we had spoken about getting involved back above the highs of the day. Well, it didn't do that, so there was no reason to get involved here. I would say still keep this one on watch, and back above 23 bucks a share. The daily chart still looks like it has room to run, and the weekly chart indicates that to be the case as well. So MDCO does still look like a good setup. Neon, as we spoke about, Neon gapped up and then it pulled back. There was no reason to get involved at that point. We were talking about if it took the high for the day, that it would be a decent purchase candidate. But I believe I said that I was going to take this one off the list because it just kind of was a little bit squirrely. I would say if you don't mind trading this stock, that it only trades 500,000 shares a day, which is about what I look for. But at a $5 stock, I would hope for more. It is kind of back and forth in here on this weekly chart. But if you get involved above today's high, I think the worst case stop goes about $5.50. NetEase, again, this one broke out on a gap. Well, in the afternoon, it failed to take out that level we spoke about midday. So there was no reason to get involved. There was no reason to buy unless, as we said, it got back above 64.20. Now, had it done that, let's say it had done something like this, where it came up, found resistance, and then broke out and rallied like this, well then as soon as we buy, we would want to set our stop probably just below this level. And then as it continues to rally, maybe sell a little bit, raise our stop to about break even or so. That's that's what we're anticipating. I don't know why that word is so hard for me today. That's what we're anticipating, but the market is not always going to cooperate. So if we try a cheat buy where we try to buy a little bit early, anticipating that it is going to go, in weak market conditions, you're not going to get away with it. You're going to get punished for those little anticipatory buys, whereas in a much stronger market, you can get away with some of the sloppier type of trading. Nuvasiv, same thing. We there was no reason to get involved. It didn't take out the high of the day as we were talking about. We were looking at this $20.70 level. It didn't get back above there. I think it's still worth keeping an eye on. It's trading in a tight range. The 2-day volume weighted average price, we're just a little bit below. But I would say set an alert at $20.70 and see how it acts from there. It's just a watch list idea. It doesn't mean you have to take action at it. Or Ship Finance, as we had spoken about, it did pull back and then rally. If you're involved in this one, I would say that your stop probably ought to go, just below today's low, actually. So about $15.70. It traded pretty light volume here today, only 360,000 shares. That's about half of its average, or a little less than half of its average. But it still looks decent, but it's thinly traded in here, so just be aware of that. The weekly chart certainly looks a lot better. So for that reason, I would still keep an eye on it. VHC, as we had mentioned. This stock in here today, where were my notes? We had seen, what I was talking about is, if you got involved just as it got above the VWAP, and I know a lot of people in chat did because we were talking about it right here, getting above 33.40, you have to take some off on these quick rallies. And then, like I said, reset your stop. Your stop should have gone, I thought, right about here. And that was at about 12:30 when I mentioned that. So you should no longer be holding VHC. And look how it came all the way back down. So if you bought it at this $33.30, 40-cent level, you would actually be at a loss at the end of the day. But intraday money management says, hey, if I get this nice pop, I got to feed some out into it, and then listen to the message of the stock and figure out where I'm going to raise my stop to. Facebook, I had mentioned intraday in the chat as well. Obviously, it's been in a downtrend. If you look at the volume weighted average price since the IPO, it's way up here at $34, and a lot of people are looking for a bounce opportunity, and we've seen a couple of them fall short of the 5-day moving average yesterday and again today. Now this 5-day moving average should begin to flatten out a little bit in here. Here's today 5, 4, 3, 2. Tomorrow we're going to begin getting rid of this data, so the 5-day moving average will still be declining even if the stock goes sideways, but it's going to flatten out. And then I think if it can take out the highs here at about 27.5, then I think that Facebook could be worth watching for a nice little pop up towards the 30 level. I wouldn't get it aggressive enough to say that it should get up to the volume weighted average price since the IPO, but it's certainly it's a stock that it had held during the day at the 2-day and 3-day volume weighted average price, and then as we saw the buyers regain control over here, and in particular this afternoon we were looking at it saying here it looks like a nice little cup and handle above that VWAP with a higher low. Well, it tried to take off. We were buyers in here, and we were I'd sold a little on some strength, but failed to mention it, and it got out of the rest of it right over here. So it was basically a break-even trade, which is a hell of a lot better than buying at 26.85 and still holding it here at the end of the day. Money management, risk management, it's the strongest skill you can have, along with a flexible mind. I hope you guys can join me. I'll have the link for that webcast in the morning, and if you're in Dallas, come by and say hello. I'll have some books for sale and signing, and a portion of all books sold at the expo, a portion of that cash will go towards drinks on Friday evening at I forgot the name of the bar, but it's the hotel lobby bar, so swing on by at 5:30. Thanks.